Good afternoon, everyone. Thanks for joining us today. We have something a little bit different today. We thought since this is the week we're declaring commercial production at Mako, we would do a joint webinar and just talk a little bit about Sailfish, Mako, get an update, and then have a live Q&A with the CEOs. So feel free to input questions in the Q&A box throughout the presentations. We'll get to those. And as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's disclosure on their website. With that out of the way, I'd like to introduce Cesar Gonzalez, CEO of Sailfish, and Akiva Leisman, CEO of Mako Mining. Thanks for joining us.
Thanks for having us, Deb.
Yeah, really exciting week. Why don't we start with you, Akiva? You just came back from site. Why don't you give us a little bit of an update on what's going on at Mako?
Yeah, just got back from Nicaragua, I guess about a day and a half ago. Yeah, no, things are going well. We officially declared commercial production effective July 1st. So for those that aren't aware of our three-stage plan for Mako, we're really doing three things in northern Nicaragua. First and foremost was delivering this now 500 ton per day operation. We're now operating at about 85% of nameplate capacity. There's a few minor things that we need to do over the course of the next couple of weeks, and then we'll be at or above 500 tons per day. Really for the remainder of the first objective of the company, mining what is the highest grade open pit mine in the world. Secondly, we have a near-term development asset a couple kilometers to the south of our primary San Albino mine, an area called Las Conchitas. We have been drilling there with one of two rigs that we have on site. And since the company has been in cash flow really since May 12th, we are going to be rapidly increasing our drilling. So on order right now are at least an additional 3 drill rigs coming to site, and that will do two things. One will be the start of an infill program over at Las Conchitas, such that we can have a mineable resource on that we will publicly disclose sometime in the first half of next year. And then really for the first time ever in our company's history, this leads to the third objective of the company, is to put a drill hole outside of the San Albino and Las Conchitas areas. There's never been a drill hole that's been placed outside, even though we have over 200 advanced targets on our current 188 square kilometer land package. So we really do think this is an orogenic gold mining camp. San Albino is just but one small expression of what we think that the overall property potential is. So the start of that drill program really will be the start to demonstrate that not only are we mining pretty extraordinary grades, averaging nearly 12 and a half grams material since we started to process the high grade in the middle of May. Now we're mining the best part of the deposit as a couple of days ago. So not only that, we do have the potential to get this asset up to scale by delivering Las Conchitas and expanding our production by the end of next year. And then really the main objective of the company is to prove that we really are sitting on an orogenic gold mining camp when all is said and done.
That's a great update. And Cesar, do you want to give us a couple minute update on what's going on with Sailfish?
Absolutely. So whatever Akiva said is good for Mako and it's good for Sailfish, because we have a stream equivalent to 3% NSR on a 3.5 square kilometer block that the San Albino mine sits on, the infrastructure and then the mine itself. And so we get, essentially 3% on that. And then we have a 2% NSR on 134.5 square kilometers that surround that 3.5 square kilometer block. And for anybody that's good at doing math in your head, you can add those two, and they don't add up to 188 square kilometers. The reason for that is that Puerto Rios and La Segoviana, the two concessions that were acquired recently, Sailfish does not have a royalty on those. But that's something that Akiva and I have been talking about, and maybe we might do something about it at some point down the future. But we started receiving gold at the same time that Mako did. Whenever Mako sends out a shipment, Sailfish gets its cut. So since May, we've been receiving cash flow. And as most of our shareholders know, we use that cash flow to return to shareholders, mainly in the form of buybacks. Just this week, we announced on the 12th that starting the 13th, we were going to do our third normal course issuer bid. Not sure if if I can look at the records and see if any other company that's publicly traded today on the venture exchange has done 3 consecutive NCIBs, but we're doing it. And in the first 2, we acquired 6.5 million shares, and we have the ability to buy another 3.7 million shares in this buyback. So we tell people that we think our stock is cheap, and then we do something about it. A lot of companies do not do that. And would we be doing that if our shares were trading at a level where we thought our assets were fully valued? No, we're not doing this as a gimmick. We're doing it because we actually think our shares are cheap. So that's the latest. And I guess we can open it up for Q&A, Deb.
And just, Cesar, you gave us the amounts of shares that have been bought back, but you did complete your NCIBs or close to on the last programs, correct?
The first one, we came a little short on completing the full amount. The second one, we bought every share that was available.
I think that's worth pointing out because most companies make the announcement of the NCIB, but they don't execute, at least not a significant proportion of the NCIB. So I think that's worth highlighting. Yeah, let's open it up for questions. I had a few in advance, but I actually would like to see some footage of site if you're able to load it up, Akiba.
Yeah, so Akiba, I'll do it. I had the camera up before we jumped on this call. And what I'm showing here is the mine itself. And I guess, Akiba, you were just there. You want to talk about what's going on at this level?
Sure. So just to get everybody acclimated to what's going on there, to the upper left is the initial mining of the high grade San Albino vein. That particular part of the deposit happened to have been higher than normal grades, but much narrower widths. I would say on average we were probably mining sporadically since February of last year, veins that may have been 60, 65, 70 centimeters, somewhere thereabouts, which should put into a frame of reference kind of our selective mining approaches, where we're actually able to deliver an open pit process like this with extremely narrow veins in the first part of the mine plan. In between, that little dimple, that nubbin that you see over there, that's the dead zone. So there was a faulting of the initial splay of the San Albino vein to the upper left. There was the dead zone where effectively there was no ore. There was an offset on the fault, and you can even see in some of our numbers that we've put out for May and June, there was a limited amount of mining of the high grade simply because we were taking out a lot of that waste in that nubbin that you see in the center. However, on the bottom right of that little indentation that we have over there, that's where the good stuff begins. So the way that we're mining is that those benches that you see on the wall are 6 meters, but we do not mine on 6 meters. We mine these half at a time, 3 meters, but we also don't mine at 3 meters. What we do is we put in our blast holes, we sample it to get a good representation of where the geology begins, to make sure that there's no surprises when we open up a mining section. Then we open up a mining section, and then we are going to be taking channel samples every 4 meters, respecting the geology. And we will take those samples in situ. We'll process in our lab. We'll get those assays back within 18 hours. We'll mark off on that vein with a can of blue spray paint where the vein is. Very good visual separation as well, where the hanging wall and footwall is. And then we're only going to be mining selectively the vein. So we'll scoop off the waste with an excavator and then just mine. So that would be a representation of a mining face before that blue spray paint is placed. So those, we have taken channel samples over there. We'll get that data back from the lab, and then we'll do a selective approach to that with that excavator. Where that is right now, that ain't no 60 centimeter vein. That's something where there's a zone called porcellana, where the average thickness of the porcellana vein can range from anywhere from 1.5 to 3 meters, with a much more well-developed hanging wall and footwall that expands the zone even beyond that. So this is game changing in terms of where we are mining today, or will be over the course of the next couple of days, versus where we were over the course of the last year, with very similar grades to what has been being pulled out principally of that narrower San Albino vein in the upper left. So to kind of guide you where we are, that core shack that you see on the bottom of your screen is actually placed literally right on top of the San Albino vein. So I guess our predecessors, when they were developing that core shack, I don't actually think that they thought fully through that this was eventually going to be a mine. I would say over the course of the next 10 or 11 weeks, that needs to be removed. Obviously, it's actually sitting on top of extremely high grade ore over there. So we'll remove that core shack. But all the way at the top of that road is our drill hole, San Albino SA19. We drilled it in 2019-155, which hit 3 meters of 60 grams gold, 4 meters from surface. So we are exposing that area now, and those are the types of grades that are not that unusual within the Porcelana zone. I don't think it's going to be averaging 2-ounce material, but this is going to be averaging well in excess of a half ounce when all is said and done. Now we're going to be blending that vein with our much more well-developed hanging wall and footwall, such that the grades that are going to be going to the mill are not going to be all that different than what was experienced over in June, where we had a mill head grade of just over 10 grams. We had a mill head grade of over 18 grams in May. But in June, when we were processing just the high grade material, it was a little over 10. Our blended grades with Porcelana should be roughly in that area. This is a coarse gold deposit with grade variability, so expect that number to fluctuate over time. But those are the types of numbers that are going to be coming through. Now, just to frame this a little bit with those types of grades and these types of throughputs, I've publicly stated that we've been mining somewhere in the neighborhood of 280, 290,000 tons a month. We've been mining sporadically since the end of last year, so we have a very good handle on mining costs for quite some time. This is something that will probably be spending, irrespective of our strip ratio at the mine, somewhere in the neighborhood of about $750,000 a month of all-in mining costs, inclusive of the attributable overhead. Our processing cost to process that material, I've stated I expect it to be no higher than $50 a ton. For June, those numbers came in below 30. I think that's because we did have, shall we say, like an excess amount of inventory, so we're eating some of that through. So our cash requirements for inventory weren't nearly as great as normal. But I do think it's going to be well under $50 a ton when all is said and done to process this. And then our mine site G&A is running around $300,000 a month. We will have break-even costs on an all-in basis, inclusive of royalties getting paid to Sailfish and the government in Nicaragua, of somewhere in the neighborhood of about $1.7, $1.8 million a month. For June, it was actually less than 1.5 because we were only processing about 85% of capacity. Given those numbers, if we produce 1,000 ounces of gold, 1,000 ounces of gold at these gold prices, we're profitable. Anything above that is our pre-tax profit. So it's actually a very easy mine to model in that respect. And it's all that cash flow that not only is going to be used for debt repayment, we're going to be making our first principal payment sometime later this month, but it's also going to be used to finance the $8.5 million exploration program. And then there's going to be opportunities to use that capital to go and explore for the rest of the property and accelerate those debt payments in a pretty dramatic fashion.
Remind us how many 1,000 ounces you've mined to date in the pre-commercial production phase as you're ramping up. I believe it was in the week this week.
Yeah, so from a mining perspective, this is going back to last year. So mining, I think we've probably pulled out somewhere in the neighborhood of 20,000 ounces since we started at the beginning of last year. From a processing perspective to date, we put through the mill, inclusive of May, June, and the first couple of weeks of July, probably somewhere in the neighborhood of about 8,000 ounces, maybe a little bit more. And then our recoveries, in terms of how we're calculating it right now, are ranging in excess of 95%.
And those all-in sustaining costs you talk about, are those the long-term forecasts, like once you potentially have other deposits feeding into the facility? Or do you think those costs come down over time?
The unit costs, I think, are more or less going to be sustainable going forward. The dollar per ounce costs will be predicated on what kinds of grades are going through the plant. So for the remainder of the mine life over at San Albino, there's always going to be grade variability, so you can go in and out of these numbers. But in terms of a diluted grade basis, when we put out that updated resource, we said our measured and indicated grade for the open pit was 9.56 grams, fully diluted. That included 50 centimeters of mining dilution on either side of that vein, inclusive of hanging wall, footwall, or waste there. So the veins themselves were averaging in excess of 16 or 17 grams in our model. And we took that down to 9.56. That does not include some of the historical dump material that we've also mined. But from now on, we're going to be blending that vein with the hanging wall and footwall, mining at much tighter tolerances than the 50 centimeters that was estimated in that resource estimate. So our expectations are going to be that when we're putting diluted vein material into the mill, mixing it with the hanging wall and footwall, will be in excess of the 9.56 grams. To the extent that we're going to be blending that additionally with some of the lower grade historical dumps, then the grades may get pulled back from there. But I think 9.56, when we're talking about diluted vein, hanging wall and footwall and the like, 9.56, if anything, is going to be conservative in the long run.
And what's been your average strip ratio so far? And do you think that this is going to increase or decrease in the future?
Right. So project to date, it's been about 19-1. I think June was just under 17. I think since the beginning of the year, it's been about 14. So it changes. You can see on the screen that Caesar's showing right now is that we are going to be developing a pit. So I think our life of mine strip ratio will average somewhere in the neighborhood of 23 to 25-1. So probably starting at the end of next year, after we mine the central pit on a different vein, the RS vein, that's kind of when the San Albino pit, the west pit that you see over here, is going to start taking on more strip. We try to schedule it just to keep our mining throughputs in a fairly stable fashion. That being said, it is very, very important to understand the economics of this project, simply because when you're talking about grades in the 9.5, 10 gram area, so this is something that will probably be 0.3 ounce material with 95% recoveries. This is that ore rock that that you have at those kinds of grades are the in situ value of that gold net of recoveries is going to be somewhere in the neighborhood of $550 a ton of material. If you're going to be moving this type of rock, just to keep the math simple, at 19-1, so 19 units of waste, 1 unit of ore, 20 units to move a ton of ore, 20 units a ton of ore when your all-in mining costs are about $260 a ton is $52. It's a dime on the dollar when it comes to the cost of the strip ratio. When that goes up from, let's say, 19-1 to the 23 to 25-1, that dime may increase to 12 cents, but it's not impacting the marginal economics of this property. What's much more important is how well do we control our selective open pit mining approach. You can see what we're doing on the screen. I don't think there's I don't care if it's a junior, mid-tier, or major, I don't think there's a single mining company that is mining a selectively open pit, controlling dilution, having a great control program like we have and what we've implemented over at Mako. Our ability to control that dilution and send to the mill grades that we've been milling to date, 18 plus in May, 10 plus in June, probably be somewhere in that order of magnitude this month as well and going forward. When you're dealing with grades like that, this is going to be one of the lowest cost mines globally. It's as simple as that, irrespective of what the strip ratio is.
All right. I had a question about the thinness of the vein, but I think you've pretty much covered it. And then see if I have anything else on the specific mining. Let's talk maybe about the regional exploration. We get a lot of questions about life of mine based on current resources, et cetera. And this is a key component, as you stated at the beginning, to the story. So maybe you can talk a little bit about your exploration plans. As you mentioned, you have an $8.5 million budget, and that's far larger than any budget that's ever been set for this company in its history. So I think that's worth pointing out.
Sure. So that $8.5 million is probably about 5-6 weeks behind schedule on spending that capital. But I do think we're going to be catching up towards the end of the year. The reason for that is whatever teething issues that we had in the mill and plant from early April to early May. We just didn't generate cash until the back end of May. So we were disciplined to make sure that we didn't bust our balance sheet. Now that we've actually are extremely profitable, we're obviously loosening the purse strings on that. We've always had 2 rigs operating, even when we weren't in a cash flow positive situation. So of that $8.5 million, that equates to a low 50,000 meter run rate. I would say just under 60% of that was for what I would consider to be infill work over at Las Conchitas. The objective is to get our almost identical to the process that we did over at San Albino, to get our geological controls down, our internal model set, such that we can then give that off to who we think is the best in the business in terms of estimating resources that eventually turn into mines. Steve Risterselli from MDA. So even though he did retire earlier this year, he actually made an exception for us to continue to work on our resources, because he finds this asset interesting, and I only annoy him to a certain extent. And then so that 55% of that budget will be to deliver that resource over at Las Conchitas. Additionally, we've always had a single rig operating at the extensions over at San Albino. This is another thing that was actually fairly misunderstood by the market. We intentionally designed that San Albino resource to be conservative, right? So everything that we had in any category, I don't care if it was measured, indicated, or inferred, every single ounce, we had the expectation that would report to a mine plan to be recovered. The only reason why we actually had any inferred categories over there was when there was some sort of a spatial uncertainty around a fault. So we knew it was there, we just didn't know if it was here or there, or if the majority of the data that was used to calculate a block was coming from something other than drill holes, so trenches. Now, one thing to keep in mind about our project is that these veins are shallow dipping. They can come as close to the surface as 1-2 meters on a very shallow dip. It's not practical to be drilling 2-meter deep deposits with a core hole. So sometimes the only way to practically get a handle on the geology is through trench work. But we were very conservative in terms of using that data to categorize whether this showed up into an inferred, indicated, or measured category for that matter. Additionally, it's open along strike. So San Albino is open along strike on this side of the El Jicaro River. We have a drill program that's looking for extensions of this to the southwest, and we're finding gold over there. Down dip, it's completely open. We have I think a total of 3 holes that are down dip on some of the San Albino vein. This is just a question about we needed to get this mine operational, but our ability to go and extend this down dip, whether it's to be making a larger open pit or to eventually demonstrate the economic viability of going underground, it's there. So this 270,000 ounce resource, we actually put in effectively bold letters in that resource. This was not even the end of it when it came to San Albino. On top of that, and actually just to categorize, our industry is set up such that when resource delineations happen, it's there to either goose the stock to get investors to invest in a large resource, or more likely to goose a larger company into buying somebody at a price higher than was probably should have been given to that company. We are not set up in an industry to have junior mining companies develop a project into a mine. At the end of the day, we answered to the reconciliation coming out of our resource model. From day one, every single bit of data that we came out was not there to get a large company to buy us out at a price higher than what we were worth. Every single ounce that we put into that resource model was put there so that we would be able to deliver that into the mine and make sure that we execute on everything that we said. So the San Albino resource was intentionally designed to be conservative because we only were able to deliver this to ourselves. We're not going to be bullshitting ourselves with bullshit data. So anything that we put out there in the public domain needs to be delivered and executed on. Now, that being said, that entirety of that 270,000 ounce resource that we put together was delineated on about 230 meters of strike. There is the river to the northeast, the El Jicaro River. However, we've extended the San Albino vein structure on the other side of the El Jicaro an additional 6.7 kilometers on ground in a concession called Puerto Rios that we bought from another public mining company in December of 2019. We're in the process of getting drilling permits over there. We do have drill permits on the other side of Puerto Rios, again, on strike to San Albino as part of that 6.7 kilometers of strike extension. And we're going to be drilling there by the very late summer of this year with targets across the spectrum that are just begging for drill holes that will show the extension of the San Albino vein. So going from 230 meters, we've already extended that to now over 7 kilometers, inclusive of those 230. So even though the San Albino resource that was put together was relatively small, even though by extent the San Albino mine life is fairly small, the ability to extend the San Albino vein structures on the other side of the river, I think it's clear as day to have that in the long term forecast for the company. And then you have Las Conchitas, which obviously is a different subset of veins, but the geology just looks like it is matching exactly what we see over at San Albino. Very, very similar type vein structures, very, very similar morphologies, very, very similar geochemistries. And it's just a question about finding more and more of these as we start to unlock the code and crack the code of this orogenic gold mining camp.
Without putting you too much on the spot, another question that we always get pertains to life of mine. Like, how long do you think that this plant, this facility, will be operating for?
So, and again, this is like, I was having a conversation with another company. I asked the same question, so I give the same answer. The types of veins that we have, the types of geometries that we have, narrow vein, which in and of itself makes it difficult to prove up tonnage, because obviously that's one of the three dimensions that you need to get to when it comes to calculating tonnage. Likewise, the geometry of the veins where we're effectively shallow dipping is that you do need to build a lot of drill pads in order to get enough drilling information to even prove out an inferred resource. So I am very pessimistic about ever having a long-dated, delineated mine life in any category, whether it's reserve or resource. That being said, that is a very, very different statement to us having effectively a generational mine. Like, every single indication that we have from a geology perspective is showing that this has the potential to eventually house millions and millions of ounces of gold in inventory. Our ability to delineate that in a resource is limited simply because the geometry that we have with our geology is such that it will be difficult to prove out a mine life that will be, for lack of a better word, the normal course of the mining industry. This is not going to be a get your 10-year project, try to extend the margins of that resource, and then sell to a larger company. And by the way, like, we used to be, Caesar and I used to be on the investor side of the business. We have absolutely no issues about investing in a company, in a stock, and then having that stock get taken out at a premium. I think that's a very, very valid investment thesis. When you start peeling off the layers to the probability of success for that happening, the amount of M&A that's happened in our industry over the course of the last 5 or 6 years, the probability of success to goose a larger company into buying your stock for something more than what it's worth, it's not the same probability that existed during the bubble of 2009 to 2011. It's not the same probability that existed when discoveries were being made all across the planet in the 1990s. This is a different game, and investors need to realize that the game is not about goosing the mid-tier and the major, buying you out at a premium. The game is about doing the proper work to find the right assets, back the right management teams, get those people to do what they say, and then build an actual mine. Because the ability to achieve our objectives is under our control. The ability to have another company take us out is not. And we really have to operate this as a business as opposed to a speculative investment. And that's just the nature of the beast.
Yeah. And as Akiba was talking, you mentioned that our history was as investors. I still consider myself an investor. I think Akiba does as well. A good capital allocator is what a CEO is, a good CEO. And I was thinking back to our time in Australia. Akiba and I spent a lot of time investing in Australian junior miners, and they have a different view about reserve and resource life down there. And I would encourage some of our shareholders, some of the people on this call that are thinking about investing, to study some of the great investments that could have been made in junior miners in Australia over the last 5 to 10 years. We participated in some and made good money. And there are companies, even to this day, in West Australia that have anywhere from a 3 to 5 year mine life. And they have a 3 to 5 year mine life for the last decade or for the last 20 years. And they generate cash flow, they don't raise equity, and they operate. That's what they do. That's the business plan down there. And I know that Australia is a different time zone, but there are some of the greatest gold endowments on the planet are out there. I'm not trying to encourage people to dump Nicaragua and go look at Australia. I'm just telling you, we're influenced by our experience having dealt with not just gold mining in Canada or in the Canadian model, but globally. We've operated a mine in Mexico. We're in Nicaragua now. We have royalties in Brazil and Nevada. We have a property in Arizona. We have another property in Quebec. We've invested in stuff in West Australia and the Canadian Arctic. So we bring a global view to what we do. And we came out of a hedge fund that has created oil and gas companies, coal companies, an airline, a defense company, real estate. So, we don't have this myopic view of the world. We have an open view of the world, and we have samples from various industries, from various geographies, and we're just trying to do whatever makes the most sense. But we get a lot of feedback from mostly shareholders that focus mostly on Canadian junior gold equities about mine life. And if we were in Australia, people would, that's not a question you would get. You would get, what are your costs? What are the grades? What do you plan to do with the cash? Is this an orogenic camp? If it is, then great, because guess what? You can have a 3 to 5 year mine life for a very long time, rather than spending the tens of millions of dollars today to show a 10-year mine life. Like, why would you do that if you could get it over the course of time and spread that out? So I just wanted to add that.
Oh, I think that's a really interesting point. And I do have a couple questions on what an orogenic mine camp can mean. So I guess the first of which is talking about the royalty again and what the Sailfish royalty covers in terms of, does it cover the areas that you're looking for the next in the orogenic camp, which would be Las Conchitas, which is covered by the royalty structure. But the two new concessions, the one along strike from San Albina, which is Puerto Rios, which I think I finally said right. And then I think you were also looking at exploring on La Segoviana this year. Is that correct? Akiba, maybe you can, do you have a map of all the concessions? Yeah. Maybe that'll.
I'm going to the website right now, Deb. There's a really nice map.
Yeah, that kind of shows the breakdowns. The easy way to remember it is anything that was in Mako before 2019 is included in the royalty structure. Is that correct, Akiba?
That's right.
So anything acquired sort of mid 2019 and after, which is Puerto Rios from Condor and La Segoviana, which I believe you staked from the government. is not included currently.
Yeah, that's exactly right. So, and then Puerto Rios being the green, and then Las Segoviana being the pink. What's that? Magenta.
No, that's
All right,
I'll give you pink.
We'll go. We'll go with pink. So you can see the San Albino deposit is that small yellowish area to the south west of the El Jicaro River. The strike of the deposit is going from the southwest to the northeast. So that green concession in Puerto Rios is directly on strike to the San Albino vein. We have done our fairly detailed level of prospecting now across the ground, and that's Puerto Rios as well as Segoviana, and it's clear. For instance, Puerto Rios was acquired in December of 2019. This goes back to a little bit of a different strategy between us and let's say our predecessors. It's not like the geology wasn't known about. I mean, this is one of those basic things where the strike the deposit's going there. Like, if you actually have another mining concession over there, that's going to be a key objective to go and kind of like finish off the pieces of the puzzle. I took over as full-time management of Mako in what was it? It was August of 2019, and then interim management in March. We knew about this project. Our predecessors didn't want to spend any capital outside of building the mine. So this was definitely an objective, but we did wait 6 months to acquire it. So one of the reasons why we waited is that there were actually quite a bit of artisanal miners on the ground. Now, this is actually a good thing, right? So it's kind of unusual to have a very large gold mining camp without artisanal miners over there. But we really did not want to have any complexities with some of the community relations while we were getting ready to be building the mine. So those artisanal miners left, and then right after that, we actually had a fairly easy negotiation with Consor to acquire that remaining concession for about $600,000. Now, in doing that, there were lots of exposures of some of those veins that are outstanding. There's a road for one of the property owners that has basically cut a vein that's great. Like literally, you're driving down there, the side of your road. We've sampled it, is grading over 20 grams. Where in the world do you find a road cut that has an exposed vein grading somewhere in the neighborhood of about 0.6 ounces of gold a ton? All of that is the continuation of the veins that make up the San Albino resource over there. So we've done very detailed prospecting, not only over on Puerto Rios, but even prior to Mako's establishment over the course of the last 12 years or so. All of those dots that you see are prospects. All of those dots are something that's grading in excess of a gram. And you can see some of the highlights on some of these prospectings. All of those are probably averaging somewhere in the neighborhood of about 10 grams plus. Some spectacular grades that we're having not only in grab samples, but in exposed veins, either in trenches and in exploration pits or the like. So the ability to find additional economic deposits over here is there. Like, we have over 200 prospects on our ground that have never seen a drill hole, but we actually do have a very decent basic understanding from a prospecting. We're mapping the veins as we see. We've taken a sample that's grading well in excess of 40 grams in situ in a vein all the way to the tippy top of the La Segoviana concession. It's grading about 41 grams in situ in that vein, and we are tracing those veins coming right back down to our mining project. So just to keep that in context, the San Albino resource was delineated on 230 meters of strike. We are finding some modicum of continuity. I don't think this is going to be a mine that's necessarily 100 times bigger than the San Albino pit, but we are finding a modicum of continuity on those vein structures, really going all the way to the top of our property, and frankly going off our property in all directions.
Yeah. So Deb, I'll give a little bit of clarity to on the Sailfish side. So Sailfish has the 3% NSR. Well, it's a stream equivalent to 3% NSR on this area that I'm highlighting. I don't know if it's that visible, but it's immediately surrounding San Albino. And then we have a 2% on this blue, which is the San Albino Mura concession, and then this yellowish brownish concession, which is Jicaro. Those were the two concessions that existed when the stream was restructured. And no, we do not have royalty exposure on these 2 new concessions. But if you look at all these red dots, we used to call this the measles map. If you look at all these red dots, there are a lot more on the concessions that have been inside the company longer because we've had more time to prospect, including drilling, which has occurred only at San Albino and these Las Conchitas zones. We're going to call this north, central, and south. South's getting the majority of the drilling. So, and look, we have time. If there is something interesting on these concessions, even if there's not, and there's a way for us to structure a royalty in a way that makes sense for both companies, we're probably going to do it. So I wouldn't fuss too much about, do we have exposure on all 188 square kilometers or only on the first 138? There's plenty of showings either way. There's plenty of exploration going on, and quite frankly, the most advanced exploration, as evidenced by these yellow dots, which are drill holes, is all in Las Conchitas, where Sailfish has a 2% NSR. In this area here.
Mm-hmm. And I was just going to add one thing to what Akiba was saying, which was the first time that I went to site was the fall of 2017, right when the permits for San Albino were first received. And at the time, there was a vein that outcropped and was visible at the very top of Murra to the northwest. And we drove out there one day. It was off the property, but it used to be able to be visible, and the geo used to take people there all the time to see it. It's since been artisanally mined out, but just to show that there is potential all over the property, and I think having such a huge strike that's been underexplored, I think is really interesting. One more thing just on the orogenic side of things, because I got a question that I think would be interesting for you to answer, Akiba. So San Albino is an interesting gold mountain. What are the characteristics of the rest of the property? Are they the same underground or classically open pit? I think this is a bit of a misconception because usually you don't see vein systems like this mined open pit, right? And just talking about the topography of the entire property, it's hard to visualize if you haven't seen it, but maybe you can walk us through kind of how you
Deb,
interpret the.
I actually have a map for that as well. Let me just find it, and it's the mega long section. Okay. This one is from. I'm pretty sure this is the one on the website, but let me just put it up.
I mean, the main reason why we're mining this open pit is just the dip of the veins, that we'll have exposure to a relatively large surface area by taking a relatively shallow amount of material out. If this was subvertical in nature, then this likely would not be an open pit mine, and you'd have to develop this from an underground. So there's a couple of components to the question that was asked. In terms of, let's say, potential to be, from an underground perspective, these types of veins do have the ability to go for miles and miles and miles down dip. The host rock is a relatively brittle schist, so almost like a shale. It's a metamorphosized sedimentary rock, very brittle. So it's unusual to have a lot of continuity without a fault. That's very different than pre-mineralization continuity prior to any localized faulting that occurs. So our ability to get control of this on the underground is really strictly limited by the data that we've put. So, like I said, there was probably about 3 holes in that model that had the down dip extension of the San Albino vein proper. There's a little bit more data on the Aras vein, which shows pretty decent continuity from an underground perspective. But San Albino, we've barely scratched the surface, simply because we wanted to get this mine up and running, and frankly, even understand the geology as we open up. It actually helps even from an underground targeting. In terms of topography and things of the sort, there's still a debate about whether the actual hills that you see, that some of the more more high angle faulting structures over there, or whether that's the cause of mineralization. I would err on the side of these are more on the low angle shears that are causing the mineralization. So I don't know if topography particularly is the driving force over here on a localized level. Certainly on a more broad perspective, it is. That being said, the types of veins that we have to the right in this chart, this graph that Caesar has up on his screen, look very, very similar to the stuff that we have on San Albino. Veins that tend to repeat, veins that have different morphologies associated with them, veins that probably have different dates of mineralization, some younger versus some older, some of which have high sulfidization contents that have also high gold. Some of them have high sulfidization contents, high sulfide contents that don't have as much gold. We do see very, very similar geochemistry and morphology, whether you're at San Albino, Las Conchitas, regionally. I mean, it really is 188 square kilometers of basically the same stuff.
Yeah, and Deb, you have to look at the history here. This area was originally mined by the Spaniards. They mined underground. I don't think there were too many open pit mines in the world in the 1600s, 1700s, 1800s, because they were chasing veins. They had to they didn't have the luxury of doing channel samples and sending to an assay lab with a 24-hour turnaround. And they didn't have the luxury of the industrial size mining equipment that we have. And they didn't have the luxury of certain processing technologies that allow you to bulk process, metals like heap leaching and things of that nature. So mining was almost entirely underground, chasing veins, and these veins got chased. I mean, we're cutting through timbers, and we're finding old mining pickaxes and equipment that was left behind from 100+ years ago, and that's the way most people would approach these veins. But we have experienced mining selective high-grade open pits from a pit that we mined in Mexico, where we perfected this high-grade, or I should say, the selective mining operation, and we brought the people from Mexico that were doing it here, and in our training people locally, so we can continue to do it on a sustainable basis. But it's a different approach. Sometimes Akiba and I sit around thinking, well, when are we going to start adding to the team to be able to mine at this type of angle with this type of rock underground? Because if people look at the old resource, which we don't really like to talk too much about, because there were a bunch of holes that we found, not literally, but just figuratively, that in the report itself. And we hired MDA to do an updated report with a bunch of new drilling. But what they had was a very large inferred underground resource. Now, those ounces didn't just disappear. The drill holes that intercepted the mineralization were valid. There needs to be more drilling to confirm mineralization and continuity. But these veins run. There are holes that have intersected mineralization as we're projecting it. These cartoons weren't just drawn, randomly. They're based on actual drill data. So there is a big underground resource at San Albino. We're mining right on top of it. There's work to be done to crack the code and to spend the money to drill underground, to define it and to scope it, how we can mine it. But that actually was how this deposit was mined historically. We're the first people to take the open pit approach because we were so confident in being able to mine this on a selective basis.
Well, that material wouldn't have been able to be included in a feasibility study. So I think, the fact that you've taken the most conservative approach to doing the updated resource, I think just shows a lot of credibility. I believe that you have a hard stop on the hour, so I'm just going to rapid fire a few questions. We had a number of questions about gavilanas and a timeline on that. Caesar, if you could give us an update on the swordfish spinout.
Sure. So we published the 43101 report. We announced it in May, And then we filed it also in May. So it was a quick turnaround. It was actually finalized the day we put out the press release. So a week later, we put it on CDAR. It's on our website. That was a big gating item. And earlier in the year, I had told investors that by Q2, so by June 30th, we would have some more news on Gavilanes. The technical report came out, and we're hoping to be able to provide even further news on what that new company, Swordfish Silver, is going to look like. So, we're working on it. We're planning on combining Gavilanes with another asset. We have to do a technical report on that asset, which is pretty much done. And then there's some, dealing with the exchange to be able to facilitate all of this, but it's coming. We are going to spin out, Gavilanes into a new company. Definitely by the end of the year. We're trying to do it as fast as possible, but as Akiba said earlier in the presentation, when we can control the things we can control, and with regards to M&A, you can't control what somebody views your company or wants to pay for, and unfortunately, I can't control the exchange and how long it takes them to review documents and to get back to us, especially during the summer when it seems like the hours get reduced, even though the days are longer. But that's the update, is that we're working on it. The big gating item was a technical report. It's out. And now we're just waiting for feedback from the exchange to be able to put out further press releases.
Okay. And then just talking about the buyback, is there a price at which you think Sailfish would be fully valued and you would stop the buyback? Or maybe you can give us sort of the terms of the buyback.
Okay. So I can answer that question in a different way. If you look at the press release announcing the buyback on the 12th, we talked about the average price that we paid for the shares that we just acquired, which was about $1.30 Canadian. It goes out to the fourth decimal point in the press release, but it's about $1.30, $1.29. So, that's kind of where our shares are trading now. I can tell you that since we refreshed the buyback, we've been active on it. If our stock, and it's all relative, right? If gold goes to 2,500, and we have some drilling success at San Albino, or the production increases dramatically. If my shares at Sailfish go to $1.80, $1.85, I might still be active on the buyback because gold's higher, San Albino's going on all cylinders. Maybe there's news on Spring Valley. If Waterton finally decides to do something with it, and that's out in the open with a PFS associated with it, where people can really model what the 3% NSR on that project is worth, and our stock goes to $2. What would I be active on the buyback? Absolutely. So it just depends on what is happening at the company, and so we don't make a determination on price and then are rigid. Kiba and I talk about it every day. What based on what's happening. So
sure. And since you mentioned Spring Valley, I did have a question around whether there was drilling results at Spring Valley or any update there, any public disclosures made?
I know there's been a ton of activity. I am not privy to that activity, unfortunately. That's one of the frustrations of having a royalty on a large private asset. But I know that the private owner has plans to make that asset public, either through an IPO or through a sale to a publicly traded company. I guess there's a handful of private buyers, but I give that a likelihood of less than 1%. This is going to see the light of day in the public market at some point.
Okay. And I had a question about the share buyback for Mako, or plans to buy back shares if they remain at current levels. Other ways that you're thinking about giving value back to shareholders? I know we've covered this before. How do you view that, Akiba?
Sure. Right. So we have a three-stage growth objective, right? So that's building a 500 ton per day mine, which we declared commercial production effective, a little over 2 weeks ago, right? So that was the first bit. It took $32 million to $31 million to build the plant, another $7 million to do an infill program over at San Albino. We have our second objective, which is to get a resource delineated over at Las Conchitas such that we can have enough feed for 1,000 ton a day operation. So there's the attributable amount of the $8.5 million. There's another $6-7 million that was spent over the last 2 years over there. those investments, in terms of the rate of return on those investments, in terms of what it would mean for Mako at the end of the day, are far in excess of what our cost of capital is. I mean, so to me, that's basically giving back to shareholders by investing in those types of programs. Regionally as well, which that's actually going to be smaller dollars, and then the potential payout is much more weighted towards the upside. Likewise, we have debt on the balance sheet. So depending on how you count the cost of capital on that debt facility is in the low teen perspective. So it's not only is that a number and a threshold that we need to look out for, there's also the inherent lack of flexibility that comes when you don't actually have a fully clean balance sheet. So just from a cost perspective, as well as a flexibility perspective, that's also going to be a use of capital going forward. But I want to stress this. I want to stress this big time. We are investors looking to invest in a business. If you want us to use a buyback simply to goose the stock, this is not the right company for you. We are making capital allocation decisions over here. If you are investing in the stock and you get frustrated that it doesn't move and say, oh, if only somebody was there to buy back the stock over there. If there are higher rates of return for me to put my capital inside the business, by definition, I am returning those proceeds to the investment community, to the shareholders. That is how we approach capital allocation. This is not the normal mining stock that's out there simply to mine the stock market. We are out there trying to develop business. And if that is not your objective, there are about 10,000 other junior mining companies that you can choose from. But we are trying to make rational decisions in terms of how we allocate capital, whether it's Mako, whether it's Caesar and myself over at Sailfish, and whether it's going to be over at Swordfish when that gets spun out later this year.
Okay. And I know that we only have 1 minute left. So I guess the main question that people have is just, why is the market reaction so muted? And how do you think about that? How do you overcome that? What do you think needs to happen for the share price to move higher?
Yeah, so to me, and I mentioned this publicly before, is that when we did the original rights offering, when we were trading at 10 cents, we weren't getting credit for anything, right? So it was in my mind's a no-brainer, and part of that was just because it was a management transition. There was kind of like this gap of information that was out there. Nobody knew what the plan was. This was a company that didn't execute on a single of their objectives for the previous 10 years of the predecessor management. So when this kind of transition happened, nobody was getting credit for anything, and rightfully so. And okay, great. And I actually use that as an opportunity to basically buy personally whatever stock I could find in the open market at that point in time. We've now achieved our first objective. So there is no risk for plan number one, a 500 ton per day facility anymore. And it should be valued as such. Now there's two other objectives of the company that I've stated probably make up about 3/4 of the value of what I see over at Mako. And that's the same ratio that I had 2.5 years ago as I do right now. Whether the investment community wants us to give us credit for that simply because we were able to execute under pretty difficult circumstances in 2020. There was a global pandemic and two major hurricanes hit our site in the middle of construction. Whether investors want to give us credit for that, that's up to them. At some point, we're going to be executing on that and achieving value. That's not the frustration. If people want to give us zero credit, the proof will be in the pudding at some point. I do get a little bit frustrated out there where we went through a transition of management and a shareholder base. I had to ask one of the former directors, who's actually a very large shareholder, to step off the board because I thought his decision processes were fundamentally disruptive to the company. And he's going to be an overhang. So until he's gone, there's always going to be this overhang of the stock. We're patient investors. Took us 4.5 years to arrange the merger between the two companies that created Mako, and then we can wait for whatever any particular personality quirks develop over time for individual shareholders who may be upset because of how the the creation of Mako happened 2 years ago. But one thing is unequivocal in terms of what we've been able to do. We've done everything that we said we've done ever since the management changes happened in 2019. And if people want to give us credit for it, great. People don't, it will take care of itself one way or the other.
Great. Well, I know you have another meeting starting, so I don't want to make you too late. If anyone has any additional questions, as always, you can email me or you can just follow Akiba on Twitter. And I'm sure if you message him there, he'd be happy to answer any questions. And it's also a great place to get updates on what's going on at site. So thanks so much for taking the time. Congratulations. I mean, as somebody that's worked in the small cap markets of Canada for 15 years now, it's very rare that somebody actually takes a mine project and builds it into a mine and gets to commercial production. So congratulations. Really excited about the rest of the year. And yeah, have a great afternoon.